Most people think martingale trading is just gambling, and they're right. But I'm going to show you how I was able to make this type of trading wildly profitable. After 5 years of experience in helping over 500 investors become very, very profitable with the strategy, today I'm going to show you how I've managed to do so. This isn't about doubling down blindly, it's about using the dynamic optimization protocol. Let me show you exactly how it works. So the first thing when it comes to martingale strategies is most people approach martingale in the incorrect way. First and foremost, if you don't know what martingale is essentially actually a gambling casino strategy. And the way it works is the more you go into loss, the more it doubles down on your position, so that when price or whatever goes into your favor, you make a big massive buck. This strategy actually is once again like a very, very mad and crazy gambling strategy. And the funny part is it can make people extremely profitable at the same time. I mean, a lot of people have made a lot of money with it in the casinos. Of course, casinos are haram and we don't trade and we don't gamble. So how do we make a strategy like this that has the potential to be very, very profitable but very, very dangerous at the same time? How do we make this strategy more consistent, more reliable, and of course, continued profits? Well, one of the first points that you want to focus on is making sure first and foremost that your strategy of execution is very, very good in the first place. You see, you want to use martingale as like a last defense. If your execution strategy is bad and price action is consistently always going against you and you're always falling into martingale, you're increasing your probability of now going into martingale strategies. And the problem with that is that you're just basically putting yourself more in the front line. Like, you can imagine that if you have martingale simply as just the defense at the back and your good strategy is the soldiers at the front, well, if you have very, very good soldiers at the front, most of the time it's going to be very, very rare that the price action is going to go against you so much that now you're going to have to call in your backup crew. So make sure that your strategy first and foremost is very, very good. There's no point in putting martingale on a really bad strategy, because very, very fast you're going to find yourself in very, very quick drawdown. And the problem with that is that you're going to be holding trades for a very, very long time consistently with martingale. I've seen trades sometimes being held for literally a whole week, and sometimes martingale will never ever go in your direction, and that is the problem. So you want to minimize that. You want to leave it as a second defense. The next most important thing is that I actually don't use martingale in the way that it's used by everyone else. You see, everyone else simply just uses martingale that it just consistently doubles as the steps go up, right? Or as the price action goes down against you. It's consistently doubling. I only do that for the first 3 steps. First and foremost, I have a brilliant strategy, and the fact is most of the time I don't even get into like large drawdowns, and I don't even get into needing to use my martingale system in the first place. My strategy is so good that most of the time it just closes out in profit. Like the first trade closes out in profit. Sometimes it only takes 1 to 2 trades to close out in profit. Maybe 3 trades closes out in profits. But if price action now is going against me for more than 3 trades, then I know that most likely the trend is going to continue for a little bit longer. This is more of an expansion, probably breaking out. So what we do then is the robot or algorithmic system is going to stop using the martingale strategy for the first 3 positions, and it's going to start using fixed loss. Fixed loss drastically minimizes, like we're talking, it drastically minimizes the potential of losing your capital very, very quick. You see, if you're consistently doubling, you can go from being in 5% drawdown to like 40% drawdown in like literally like 70 pips, depending on your risk, of course. If you use fixed loss system, although yes, it is still pretty risky, and remember, you still need to have a good strategy, it is a much safer route than just going full doubling. And in my personal opinion, this has been a very, very good way to go about it, because the first 3 steps that use martingale, it usually recovers very, very quickly. Like most of the time, the price action is going to recover very, very quickly in the first 3 steps. But if it doesn't, then we go to a more safer kind of a system, and this is like a hybrid system the way I see it. It's like a grid martingale hybrid system. The next thing about martingale systems is that you have to use extremely low lot sizes. You see, the biggest thing about martingale systems and systems like grid systems, whatever it is that you need a large amount of capital and very, very low lot size. So first and foremost, you're going to need a decent amount of capital, right? We're talking like $5,000 minimum to even make a martingale work. And on that $5,000, I'll be using 0.01. Now, the chances of you blowing your account to 0.01 when having a good strategy using the fixed loss, etc., the points that I've mentioned prior, is very, very low actually. Like, we've back tested this, we've forward tested this, we've shown you multiple MyFX books, we've hundreds and hundreds thousands of clients using this. No one has ever blown an account so far using our system in the way that it is working at the moment. No one has ever blown an account by risking correctly. We taught people to risk very, very low. If you're using 0.01 lots and Martingale's up, it goes 0.01, 0.02, 0.03, and then it just goes 0.03 consistently, no matter what. Like, you can take a severe amount of drawdown before even getting close to being in the danger zone for your account. So this is an extremely important point. You see, people, they use a Martingale strategy, then they also use a Martingale mindset. So they start risking a lot as well. You need to remember that your strategy on its own is already a very risky strategy. There's no need to add that extra risk by adding extra lot sizes and making it very, very large. People don't have good enough realistic expectation of Martingale. That's why they think that 0.01 is very, very low for a $5,000 account. They treat it the same as manual trading, as if it's a one trade, one kill system. That's not the way it works. Martingales are very, very different because they take a lot of trades in one basket. That's why you need to keep the lots very, very low. The next and last point that I would say is probably the biggest, like one of the biggest reasons for our success, is something called, and something that we've developed personally, which is our unique mechanism. It's called a dynamic optimization protocol, and really it's just a fancy word for a checklist. And this dynamic optimization protocol is literally just a protocol that we take a look at a checklist where we go, okay, if this, that, then we don't run the robot. And this is the biggest thing. You see, most people run the Martingale robots through all market conditions, and that's not good, because you need to understand that markets go into cycles. Remember, Martingale robots work in markets that range up and down, up and down, up and down. They don't work the best in markets that just consistently expand. A lot of people might say that it's impossible to be able to predict when the expansions happen, and I totally disagree. I do think that it's probably impossible to predict every single one, but remember, trading is all about probabilities. When you have all of these points that I've mentioned, plus having the dynamic optimization protocol, you're really stacking the probabilities on your side. So in that way, that if I make sure that I don't run the robot on times I predict that an expansion is going to happen, I've massively increased my probability. And remember, I'm trading the markets 6 years. So I know a thing or two about market cycles. I know a thing or two about how the market moves. We also look at fundamentals. Fundamentals, macro and micro. So we'll take a look, okay, if we see that NFP is literally going to be on Friday, well, it's pretty stupid for us to run the robot on Friday, even to run the robot on a Thursday, because we understand that the market is probably going to make a big sharp move of 200, 300 pips. In that way, the dynamic optimization protocol checklist will not allow me to trade that day. Another thing is, for example, if I know seasonality-wise that usually Thursdays are just a very trending day in general, I simply do not run the robot on Thursdays. Once again, this adds to my probability. Remember, trading is literally just about having multiple different percentages, building blocks of probability, and just adding them and adding them and adding them to your side. So that is pretty much it, guys. I mean, if you use these 4 points with your Martingale system, remember, having a great strategy, using very, very low lot sizes, have dynamic optimization protocol, and making sure that you're using this hybrid Martingale grid system, you should see very, very nice and consistent profitability with your Martingale system. In fact, if you're interested in learning a little bit more about our system, you want to ask any questions, etc., you want to book a call with my team, for example, just click down the link in the description. My team will take you through all the different performances, the different MyFX books we have, how a robot works, how the dynamic optimization protocol works in detail, and much more, of course. With that being said, make sure you click the like button, subscribe, and I'll catch you guys in the next video. Take care.